Welcome everybody to a very deep red Monday, guys. So the futures looks very negative. We have the Dow Jones minus 3.42%, the S&P 500 minus 2.5%, the Nasdaq 2.36% minus, and it's going further down, guys. This is the trend of this morning, and we just talked about it over the weekend here on this channel. It can be that the S&P 500, the next bigger resistance line or resistance would be somewhere at 2,800, and through profit taking as well as the overall situation with the fear of a second wave could drag the markets further down. However, guys, okay, I just saw this graphic on Instagram today. Warren says, just say it, Tesla stock price is way too high. And Alan says, it's too high. So I think that, a correction on those absolutely insane profits that the market went over the last couple of weeks is totally healthy even, okay? But what drives this bear push? This is almost after the melt up, we are almost having a meltdown this Monday. But let's have a look into some fundamentals and mechanics of the markets, because overall the mechanics of the market are looking quite good, guys, and this is something that you need to understand. The liquidity into the markets are still very high. So you can here see on the worldwide scale the global liquidity is going further up, guys, and the securities or the assets still have to follow. As you can see here, the red line and the yellow line are following each other very closely. So when there's huge liquidity into the market, the assets usually following. And so you see the assets are actually a little bit lagging behind it. So we can expect over the next future that the markets should go up if we don't have, a devastating second wave, obviously. Then on the other side, we see also China, is announcing further liquidity injection. So the People's Bank of China, PBOC, is pumping about $28 billion on fresh liquidity on Monday. So this is also obviously positive for the banking sector as well as the economy if the liquidity stays afloat this way. And you see everybody, it doesn't matter if the Fed, right, Europe or the People's Bank of China, all of three big instruments of financial money makers are pumping those dollars, yuans or euros into the market. So you can see that this is quite positive and stays that way for now, okay? So this is important to understand that from the liquidity side, nothing changed. It's still going very much up, guys. So I just want to quickly see if the stream is healthy. Yeah, okay, the stream is healthy. And then on the other side, also the Fed is really building up its balance sheets. Now, as of 3rd June, we have a record 7.2 trillion balance sheet, guys. I have never seen something like this before. Unprecedented situations everywhere you look, on each sector, each area. So also the Fed keep on loading up assets and pumping money into the market. So also this stays liquid. Then let's have a look into the other indicator that I found now, which is a very interesting graphic here because it's showing us the ratio of insiders. So let's imagine that the overall people who are inside the companies, who know more, as we know, buying or selling more. So this is the indicator, which I think it's quite interesting to see, because then you get a feeling what the people inside the companies are feeling about the market. And as you can see, the overall situation is going into a more bullish scenario, right? So we are around the area where we were in the beginning of March. So I hope that this is just a dip on further higher markets. I think this is, there's profit taking, there's second wave concerns. So there's the question how long this can prevail on the markets. And usually, after such a dip like today, for example, the markets should also bounce back tomorrow. So don't take it too serious, guys. It's totally normal on the stock market to further go in either direction. But the definitely the second wave issue is real, and therefore I want to have a look with you guys on the US situation. So therefore there is like a kind of tracker here on Google. So you just put in this search term, and then you see that actually the number of cases little bit upticked from this trend. So if you're having a trend here going down, it little bit upticked here on 13th of June. Then over the weekend, it went a little bit down, but then we have to see how it really works. And when we going into some different states, which is also more representative sometimes. So as you see here, Arizona also ticking up quite significantly. This is the fear that the market has over a second wave, right? Florida as well. Look at this uptick. Then I think it was Texas was also. Let's see Nevada. Nevada is quite stable for now. And let's see, Texas is also uptrending. So this will be the very, very interesting outlook, guys. And, it's all about the second wave and how strong the second wave will be, okay? We know that the US government don't want to have further lockdowns, which I can totally understand, because this is the most horrible thing that you can do. In my personal opinion, this is just short term. We see the fear, we see the profit taking, and both together can drag the markets down. If you're looking into the S&P, guys, how much we could gain over the last couple of weeks. This is just so healthy to just take a small correction here, and unfortunately it don't want to open. However, here, okay, so let me see if we can look into the S&P real quick. I think we have to do that on Yahoo Finance. Look where we came from, guys. From 2,300 to almost 3,300 in just a matter of 2 months. Okay, so whatever you see currently on the market with, such a negativity, especially on Mondays, then don't get scared out of it. it's totally normal that we have this kind of corrections, and these corrections are healthy, and it's going further down, guys. So the S&P future is already minus 2.7, and I'm very interesting how the markets will open in about 7 hours. So I think this is all you need to know this morning. Thank you very much for tuning in, and I see you later with some much more content here on this channel.